Welcome to another episode of the Genesis Mining Education Center. I'm very happy to be here today with a special guest we have for this special event. Special event is still the Oktoberfest event, so our voices suffered in the meanwhile a little bit. But very happy to be here today with Joshua. Now, say your last name, Scigala. Yeah, he's the CEO and co-founder of Vaultoro. And in today's episode, we would like to talk a little bit about money, about the history of money, its characteristics, and why certain forms of money are maybe better than other forms of money. So, and he's an absolute expert because Vaultoro is the first real-time Bitcoin gold exchange, so something really, really amazing. Maybe you can explain a little bit to us what your exchange is doing and why you choose to be a gold to Bitcoin exchange and not one of these many US dollar to Bitcoin exchanges.
Yeah, well, thanks a lot. Basically, I got into Bitcoin like many other people to get away from fiat, to exit that whole Ponzi scheme. And the trouble is I kept on finding myself hedging the volatility in fiat or even pricing everything in fiat. And I wanted Bitcoin to be able to find a price discovery mechanism with another asset that's also not just printed out of thin air.
Yeah.
And so, yeah, gold was a really good option. And then Mt. Gox happened, and I lost a lot of cash in Mt. Gox collapsed. So I got sick and tired of all these exchanges going bust or online wallets running off and these hacks.
Yes, yes.
And I wanted to really show how transparent an exchange could be. So I knew that gold can be a counter asset that is actually physically owned by the user. And not many people know this, but when you put cash in a bank, it's not your money anymore, it's their money.
Yes, yes.
They just promise to return it whenever you want. And usually that works out, but sometimes not, like in Greece and Cyprus.
Yes. Yeah. That's. I think one important point here, because not everyone might know Mt. Gox. Mt. Gox was an exchange that, as you mentioned, got bankrupt. I think in 2000. When was it?
14, end of 14.
End of 14. Yeah. So it was quite a lot of bitcoins got lost, and there was kind of zero transparency. All of a sudden they said, our cold wallet is empty and we don't have as much or as many Bitcoin as we should have, right?
That's right.
It was a huge problem and a huge problem with transparency at that point in time.
Absolutely. What we saw was in the post of it happening, a lot of people got data dumps of what actually happened, and some of the forensics of that saw that they'd been running kind of a Ponzi scheme for a long time. I think there was a hack at the start, or they had to pay some huge fines, and they could never they just thought, we won't tell anyone, we'll just make it back with trading fees and get it working again. Of course they didn't. Now, what we did on Vaultoro to fix this issue, because if they had a transparency protocol in place, and the blockchain is beautiful for transparency, it's the ultimate transparency.
It's public, so everyone can see what's going on here.
Right, and so what we saw instead was so for instance, if we had the sort of transparency that we have on Vaultoro, someone would have red flagged them a long time ago. It would have saved Mark Capellas, who was the CEO of Mt. Gox, his ass probably, because I mean, I don't know the guy, and I don't think he started off with malicious intent, but fell in this spiral of nightmare.
Yes.
Maybe, I don't know, maybe it was malicious, I can't make that judgment, but I definitely know that some sort of transparency would have, some flag would have popped up, hey, what's going on, the numbers aren't right.
Yeah. You mentioned a couple of times the term fiat money. So maybe not everyone knows what fiat money is. Maybe you can give a short explanation.
Okay, that. So fiat money is the money that we all use these days. It's the paper money that the government issued currency is by fiat of government.
Exactly.
And so
it's not backed by any valuable asset, right?
That's right. It's not backed by gold anymore. It's by fiat of force.
Yes, exactly.
Now, a lot of currency back in the day was backed by gold. You took a piece of well, originally what money was gold and silver, right?
Yes.
And people took this gold and silver to markets and they traded with it. But there's problems with gold and silver because it's hard to verify as a normal person. You can hear it sometimes. They have techniques like ping and the type of sound, but it's not precise. It's very heavy.
Yeah, we talk about the characteristics then a little bit later. But so kind of fiat is kind of, as you said, is kind of not backed by a valuable asset.
Yes.
And we just kind of accept it because our government asked us in a friendly way, please accept this money because otherwise,
Exactly.
I will send someone to you or you will go to jail or whatever. So it's kind of forced upon us and I'm not sure, 50, 60 years we kind of live in this fiat world and for us it's kind of the normal thing, right?
And what's amazing with that is that now with cryptocurrencies, we can test out different economic theories without force. Because in the past, someone like Marx would come along and then some state would take that philosophy and that economic theory and enforce it. And they have to enforce it to try it out.
Yes, yes.
And then you end up with gulags and all sorts of things if they're not well thought out economic theories. Whereas crypto, you can try different things. You can see, you launch a coin and see if the market accepts it, see if it is a better coin.
That's a very good point. And that's actually, when I read a little bit more about money and how these things work, I found there was some, let's say, between different schools of economy, there was some overlap, some agreement, and some total disagreement. And for example, the people that kind of support the Keynes way of thinking about economics and these kind of Austrian school of economics, both of them kind of say, okay, money is the most important good in any economy, because it's kind of this intermediary good you need to make everything kind of frictionless or have less friction. So they both agree it's the most important thing, but what they disagree or the consequences that comes out of it is different. So the Keynes people say because it's the most important good, it has to be controlled by a central authority, by some sort of central bank. And the Austrian school is saying exactly what you said. Now, because it's the most important good, we should have a market for that, and the market should decide what form of money they would like to use. So this is exactly what you said, right?
Absolutely, absolutely. That's perfect example. In fact, we saw, for instance, a good example of that was in the early days, people were worried that Bitcoin, because Bitcoin, for those that don't know, has a very slow, has a very understood supply curve, and you guys here know that very well. But a lot of people hoard it because they know it's getting less and less and less, and it'll never be more than 21 million. Now, someone came along and said, yeah, but then everyone will hoard it and the economy won't work. So one economic theory was to have what's called a demurrage coin, which means that demurrage is the cost of holding money. So this money would slowly go down in value, and some of that value of people holding it, if you held it too long, would redistribute around to the network again. And everyone thought, this is brilliant, it means the market will start and everyone will be spending their coins. And what happened? This massive pump when the coin got launched because everyone thought it was a great idea. And then all of a sudden, crash, flatline, and it's flatlined ever since.
Okay, that's a great example.
Right, and what's amazing about that is that we hold fiat currencies like euros, and they're losing value every day.
All the time, yes.
But we don't care about that. So as mainstream, us in the crypto world do.
Yes, and I think people are increasingly aware of that fact, right? After these things, after the financial crisis, the trust in the fiat currency system is not as high as it used to be. And to give a kind of my personal experience, when I started working after my university, I kind of thought, oh yeah, fiat is nice, and I didn't understand all these people that were kind of investing in gold, and I thought that's some kind of old school, old times thing.
Right.
And then there came the financial crisis, and there came Bitcoin, and I was thinking more about it, and I said, oh, gold actually has some properties, and it's not state controlled, and the same fiat money is. So maybe it's good. And then for the first time in my life, I bought some gold, some physical gold. Yeah.
Yeah, right.
So now we talked a little bit about these kind of, started already about supply curves and durable and how easy it is to transport. So there was, I mean, in the very beginning, there was people were kind of using, how they called barter. Yeah.
Yes.
So they were kind of exchanging, yeah, I have one cow. And you have 5 chickens, let's trade, or I have a stone eggs and you want to have the stone eggs, and I say, okay, let's hunt together a mammoths tomorrow, and then you get the stone eggs from me, something like that, some kind of agreement. But people found over time, okay, money makes the economy work more frictionless because we don't need this special arrangement, and then everything is a little bit easier. Yeah. But not everything or not every good is kind of usable as some good form of money, right? Yeah. So a simple example would be eggs, for example, is not such a good form of money because after a couple of weeks, they're not so valuable anymore. So they lose value. So, and what we would like now to do is kind of talk about some of these characteristics of money, which kind of make good money. And maybe you can give your opinion on and compare for us a Bitcoin, gold, and fiat currency, and explain a little bit why you think this is like it's very scarce or not so, and so on. Yeah.
Yeah. So.
I can start maybe just giving the kind of the characteristic, and then you tell us about gold, fiat, and Bitcoin. What you think about that? So first term would be durability. So something like a diamond is very durable. Yeah, it's very hard to destroy. Egg, very fragile.
Yes.
So how do you see gold, fiat money, and Bitcoin with terms to durability?
Well, so of course paper currency isn't durable at all. You put it in a washing machine, it's gone. Australia has a plastic version, but that's just the cash side. In terms of most fiat currencies, actually just digital numbers as well, so it's quite durable. Gold is extremely durable. You can throw it in the ocean, get it out 1,000 years later, it hasn't rusted, it's still there. And you can also make it divisible down to the atomic level because it's a base metal. So, Bitcoin is, well, it's durable. It's very durable, but if you lose the private key,
of course, yes,
then it's gone.
Yes,
it's dead.
I mean, it's still in all these ledgers, right? And because every Bitcoin node kind of has a complete list of all the accounts.
Yes.
Yeah. So theoretically, it's still there.
Yes.
But as you said, if I lose the access code, it's kind of practically gone, right?
Right, and there are theories and people looking into it in the past anyway. A long time ago, I remember reading someone saying, look, if we know that a private key has been lost for a certain amount, for sure, we can actually peg another crypto, some colored coins, to that and represent that lost coin in these new ones.
Okay, but it's difficult to say if it's just kind of hoarded or stored for a longer period of time, or if it's lost, right?
Exactly.
Okay. Exactly. Good. The next point would be a portability. So diamonds, again, I can put in an envelope and I can send them to the States or to Europe or wherever I want. Yeah, but at least they have some concentration of value. If, let's say, cows would be my form of money, sending a cow over the ocean is a lot of more difficult, right?
Yes. Yeah, and in fact, there's a lot of stories about how usually when there are refugees, like say the Jews during the Second World War, a lot of them that survived because they had a lot of value stored in a small amount of diamonds or gold that they could put in their pocket and run. If you try to have bigger things like property or cows, you just lose them. You have to run and leave.
So how's it for Bitcoin, gold? I mean, you mentioned gold is kind of has a high density, so it's relatively well portable. But if I want to transfer 500 million, then it's
well, it's just crap portability anyway because it's a physical asset. We now live in an information age where we expect to be able. It's normal to send some money to Australia or an email. You know, we're used to instant satisfaction.
Yes.
And we're already annoyed with the fact that international transfers take 3 days.
The 3
or
business
more.
days. Yeah, that's
Business
crazy.
days, right?
Yeah.
Because the computers don't, work on a Saturday or
Yes.
Sunday or something.
Yes.
But yeah, so I would say that Bitcoin is the best in that sense.
It's very kind of easy to transfer. It's like email, right?
Yes.
It's kind of very fast, and you do not even have to know where the recipient actually is physically located.
And that is just amazing.
Yeah,
absolutely
it
stunning.
is.
Yeah.
It is. Then the third thing, the third characteristic, if we talk about money, which is often mentioned, is divisibility.
Yes.
So how would you rate gold, Bitcoin, and fiat in these regards?
So fiat, you're down to 2 decimal points, really.
Which is not too bad. I mean, 1 cent is a small amount, but if you kind of want to, let's say, do something like very small micropayments, like connecting to a Wi-Fi and
Yes.
pay for every second you use the Wi-Fi, the cent would not be enough, right?
Exactly, and that's purely because most fiat exchange protocols are pool technologies that. So you have to give me everything I need to pull money from there, and that opens it up to fraud. I could then go and sell that, and so the cost of this fraud is then spread across everybody in the world, and so you can't have a micropayment. Usually, like Apple's got it down to the minimum by 99-cent apps.
Okay.
You can't get down to 2-cent apps because it's just not worth it.
Yes.
Credit card companies, but. Gold is an interesting one because it's not really very in a day-to-day way. It's not very divisible.
You can hardly break the gold bar.
Yeah, and there are some, but and people shave off bits and stuff, but it's not very good. But like I said before, it's divisible to the atomic level theoretically. So if you can mix that, and we'll get to that a little bit later, these crypto tokens with a full bar, and you slowly divide that bar up using the crypto tokens, then the value is there.
Yes.
And that can be spread around.
Okay. Then number 4 on my list is uniformity, or sometimes it's called, I think, fungibility. So
Yes.
how much does one item look like the other? So for example, for cows, one may be very different, have a different weight, be in a different shape, different age, so they are not uniform. One animal doesn't look like the other, and the value is different. How is that for fiat, Bitcoin, and gold?
Well, for fiat's an interesting one because the fungibility is only there because the government says it's fungible. Because every note has
it's $1, yeah.
Yeah, like every $1 note or whatever, €1 has a code on there that makes it unique. So they could theoretically, if this note was in a robbery 2 transactions ago and I just happened to get it,
yes,
then I could be holding something illegal and
without knowing it,
knowing it, and they then steal. The government comes and takes it from me. And there was big court cases a long time ago stating that money has to be what's called fungible, like you said, that if I get one, it's the same as any other money, no matter what happened to it in the past. And so money is there, fungibility is by law there. With gold, it's usually down, there's different things, there's coins and stuff, numismatic coins, which are, they look beautiful, so people put different values on it, they're kind of like collector's things. But if you're just going down to a base gold bar, it's down to purity.
Exactly, and the purity, there is some sort of standard for gold, right? Like 99.9% or so.
Yeah, so especially in the professional bullion exchanges, there's good delivery bars. So
Yes.
they have a certain size, a certain form,
Standard,
and a standard, and they're tested by the London Bullion Association. So that means they're really liquid because everyone doesn't have to test it every time. And actually, the gold bullion market is the second most liquid markets on the planet.
Oh, really?
Under the FX market.
Really?
Yeah.
I didn't know that. Wow. How is that for Bitcoin? There was a lot of discussion about also related to this anonymous coins, and like you could get, because you mentioned it, you could get some Bitcoins that stem from some illegal activities. Yeah. So
you got them from something totally normal, but 2 transactions ago they were in something illegal.
Yes.
And if that did happen, it could collapse an entire economy because you then have to check the history of every coin while doing a trade. So imagine going to pay for something, and when you receive the coins, you're like,
yes.
And because it's a push technology, you can't send them back. If you get payment for something, you're like, what?
It's in my wallet now and then mixed, with the others. Yes, yes.
Now, Bitcoin, I know that there's ways, if you really know what you're doing, there's definitely ways to make them truly fungible or truly private. And I think it's going to be a problem for Bitcoin if we don't solve this, because already I've talked to shops and stuff, and they want more anonymity, and a lot of people go straight to drugs and why? Because you're doing something illegal. No, it's because as an entrepreneur or as a business owner, you don't want your competition to know how much you pay for your supplies,
of course,
or where you get supplies from, or you don't want your customers to know your markup, and you don't want your workers to know how much you are getting paid sometimes. So there's lots of absolute legitimate reasons why people want absolute
fungibility
with their coin. Now there are other alternative coins, as you know, that have tackled this front head on as their main selling point. Well, they're truly anonymous. There's one called Dash, which, as far as I know, its protocol uses what Bitcoin has in terms of an extra step that you do with Bitcoin, but they've built it directly into the wallet.
Yes, I think they have some kind of mixing service integrated already in their masternode system.
Right. So that's really fascinating. Then there's another one called Monero, and there's a new one called Zcash coming out, which is everyone's very excited about. So
which increases anonymity to a higher level, and by that the fungibility, right?
Yes.
So that's an important thing. Then one important thing is scarcity if you talk about money, and it's also from the economic background, economic theory, it's quite an interesting thing. So scarcity means kind of is the amount of my asset limited or unlimited, or what is the supply curve? So how to compare these three, fiat, Bitcoin and gold, in terms of scarcity?
Well, we'll start with Bitcoin, because Bitcoin, you know exactly how much is going to be released. You don't know exactly the ones that are going to be lost. But that just means it'll be worth more because there's less supply in the system. But I could tell you 120 years from now, pretty much how many Bitcoin will be in
21 million, right?
Right.
Yes. So there is an upper limit, and everyone knows due to the mathematics that there is this limit. And a lot of people think, how does that work? It works because instead of making more and more bits of more and more cakes, you just have the one cake and split it into tinier and tinier pieces. Exactly. So you eat half of the cake, and then from the remaining half you eat another half, and then from the remaining quarter another half, and so on.
Right. And you can use that analogy really well in terms of divisibility. This concept is that if you have a cake, and then you make another cake and another cake, and you have millions of cakes, no one wants it anymore. I'm sick of this cake.
Yes.
But if you make the cake slices smaller, everyone's like, can I have another piece? It's really thin.
Yeah, it's true.
So the value of something goes up because you're only dividing. It's scarcity.
Okay. And how is that? Yes, fiat.
Well, fiat, nobody knows. They just need to. Central banks will just create more credit out of thin air, which usually is through lowering interest rates, because that means more people borrow. And
this is kind of this fractional reserve banking and creating money out of thin air, right?
Yeah, creating debt out of thin air.
Yes, also debt. Yeah,
and that's a really important thing. Is that, and we can talk about that a little bit later, because I think that's key about money. But so we don't know. It could be a lot. And gold is not well known, but throughout history we have a supply curve that's pretty stable, and it's getting lower and lower. A lot of the mines are getting harder to tap.
Yes.
So it's kind of interesting.
So is there some sort of, I know in the oil industry you talk about peak oil.
Right.
Is there something like that in gold?
I mean, I don't know. I'm not sure. I don't think that. I think, it's just one of these things that maybe technology gets better of finding smaller amounts. At the same time,
harder to
find. And really, it's so rare. You can fit all the gold that's ever been mined on Earth in about a tennis court.
Yeah.
So the tennis court squared.
Wow.
Is about how much gold.
Doesn't sound so much,
it's
but okay. And last point on my list about characteristics of good form of money is security. How easy it is to counterfeit, to use a fake money. Yeah. So make you believe you have gold, but in fact you have tungsten. Or
Right. Yeah, this is a very important point. That gold is hard to verify. There's a lot of techniques to do it, and professional vaulting facilities have those techniques. But to get a coin and then in terms of at the marketplace, it's very hard to verify. But yeah, I think
for Bitcoin,
for Bitcoin, it's simple to verify.
Yes.
It's not hard at all. The software does it, and that's the whole joy of this.
And you are absolutely sure you got a real Bitcoin in your account, right?
Yeah. After 2-3 confirmations, you can be very, very sure to a very high percentage that you've, and then up 6, it's fine.
Yes. Yes. And cash money?
Yeah. I mean, there's people counterfeit cash money all the time. The largest of those counterfeiters would be central banks, I guess. But some say. But there's also countries that during wartime will counterfeit another country's currency and try to flood the market to destroy their currency.
Oh yeah, that happened. Yeah. I think it's almost an act of war, right? To counterfeit. And I remember there were US dollar bills in circulation that were so perfect that even the Federal Reserve could not really easily identify that this is fake money.
Right, and that's why they have serial numbers.
Yeah. Wow. So I think thanks for that part. I think that was very helpful for our viewers to understand kind of the different characteristics and to see kind of the list of properties that money or good form of money has. Yeah. So now we talked a little about the economy and economic theories. Do you think that a good form of money should be scarce to be useful as money?
Yeah, absolutely. It's a fine line of scarcity and you don't want starving people, right? So you don't want it too scarce. But a really good example is if you go to an auction and you have a gadget for sale and everybody in that auction only has $1, then the most this thing will sell for is $1. Give everyone $1 million. The same thing, exact same thing, could potentially, if some bidding war goes crazy, be worth $1 million. And so that's how you see inflation. What inflation really is when there's more of this stuff in the room, things go up in value just because people have more to give out. So scarcity is really important.
There is this standard argument, maybe you can comment on that. Like, if I create a form of money, like Bitcoin in this case, which is, by the way how it's built, is deflationary in the end, right? I mean, right now we are producing, but in the end you mentioned some of these Bitcoins get lost, and we will come to the point where kind of we have kind of stable amount of money, and even the amount of money can even drop, the amount of Bitcoins get lost. But we also have kind of, let's say, the whole world uses Bitcoin. Yeah, what a wonderful world. And the economy grows. That means kind of with a fixed supply of money that prices would kind of go down. Completely the opposite of what we have right now. So some economists, they argue, okay, because there is deflation, everyone kind of will notice, okay, if I buy the item in the next year and not now, I will just better save my money now and spend it next year. So no one is going to invest or spend money, and the whole economy will collapse. Do you think that makes sense?
Well, I often say to people, you have the exact same problem with mobile phones. You could buy this mobile phone now, but you know that in a month's time there's a much better one coming out. Why do you buy the one now and not wait for a month? Eventually you just buy one because you need it.
Yes.
You need to eat, you need to buy things.
Otherwise, no one would have a mobile or a computer right now. Yeah?
Right. And one of the interesting aspects that I've noticed with my own spending habits over the years of using crypto only
Yes.
Is that I think it's a really green currency. It's a really good currency for lowering this massive consumerist culture that we've got. Because I used to with my fiat, you want to get rid of it as fast as you can because it's losing value.
Yes.
That's not consciously in your mind, but it's
very good point.
And so you just buy any old rubbish that will break. You just buy a drill from the cheapest one, and then after one, building some IKEA thing, it's broken and you throw it out.
Yes.
Whereas when I'm spending Bitcoin, I'm like, this could be worth more, so I better spend a bit more, get a good quality thing that will last me.
Yeah, that's a very good point.
And so that's personally, I don't know if other people have experienced
that. Of course, you would say, I know maybe that in this kind of world, the beer on Oktoberfest next year is 2% cheaper. But will you stop drinking beer now?
Yeah, exactly.
Obviously you won't. Okay. So you have a lot of experience with these things, Bitcoin, gold. I think you are the number one expert probably when it comes to these two things, and you're probably talking to a lot of gold investors and gold bugs. Yeah. Do you think people that know the concept of gold very well and are interested in gold, so-called gold bugs, is it difficult for them to understand Bitcoin, and what are kind of the points you need to explain to them?
It was in the very early days of Bitcoin. Gold bugs were very anti it because they said, well, you're just printing this out of thin air too. And it's taking a while. It's taken a while because a lot of gold bugs have invested a lot in gold. That's what they think about all day, every day. They love it. And it's this concept of cognitive dissonance, which means that when you invest thought or belief into something for long enough, you have a hard time changing that belief even if new evidence comes along. So what really has changed people's minds is understanding that, look, when you have a euro in your pocket, somebody owes a euro to the bank with interest. When you have 50 euros, somebody owes 50 euros. So it's debt-based money.
Yes.
And that's the problem when they're creating out of thin air debt. Now it's different if gold is a rare metal that's found into existence and spent, and it just keeps circulating. It doesn't need to go back to the earth. It's a rare metal found. Bitcoin is a rare number found into existence and spent, and it keeps circulating unless it's lost, but it'll keep circulating and being used. It doesn't need to go back to the blockchain's algorithm. Can't be unmined. And so that's brought a lot of gold bugs. Slowly they're starting to understand the difference between a fiat currency that's credit printed out of thin air with interest and something else that's mathematically protocol used to generate out of and it's not out of thin air anyway. You guys know it best here at Genesis Mining is that there's a lot of computational power, electricity, stuff going on.
But you cannot touch it, right? That's sometimes a problem with it's not a tangible asset like gold, right?
Right, but we are living in a digital world now.
Yes,
and so
they need to adapt.
They need to adapt.
Wonderful. Now, we talked about these exchanges like Mt. Gox in the very beginning and the lack of transparency.
Yes.
And I know that, I think you also suffered from Mt. Gox, from this disaster, and you wanted to make it better.
Yeah.
So can you explain a little bit to our viewers how you tackle this problem of transparency and how you do a better job than Mt. Gox? I think you have these how they call it, glass.
A glass books protocol.
Glass books protocol. Yeah, that's very interesting. Can you explain it a little bit?
Yeah, sure. So what we do is give every user an anonymous ID, so that only they know. They go into the back end in the settings and they see this is your anonymous ID. And then they can log out of the system, so we don't know that they're checking. That's really important. So they can then check. We have published every anonymous ID, and next to theirs, they can find theirs and see how much gold and how much Bitcoin they've got. And if that's correct, they can assume, okay, I'm not going to scream and moan about it. I'm not going to put up.
If my number does not show up, I would go to the forums and say, hey, something is wrong.
Something's wrong here. And then what you can do is you scroll down through the thousands of customers, and at the bottom you see how much gold is the sum of all holdings and how much Bitcoin is.
So that's kind of your liability side.
Yes. Well, the gold isn't a liability actually, which is interesting, but because it's in their name as their property.
Okay.
So it's not. It's off of our books. So even if we go broke,
it is their property from the very beginning.
From as soon as they trade,
we're
out of the picture. So that means if we go under, it doesn't matter. Even liquidators couldn't touch our clients' gold. We couldn't have a bail-in like Bitfinex did or anything like that because we can't touch other people's property.
Okay. So you published all these numbers in an anonymous way so they can verify that they're part of this list?
Yeah, and we took that inspiration from the Bitcoin protocol because they have these pseudonymous codes.
Yes.
Public keys. And then we also published the Bitcoin amount. And they can check the sum of the Bitcoin to the sum of all Bitcoin on the cold wallets and the warm wallets.
Okay.
So that they can then see, okay, they've got all the Bitcoin and the gold. What we do is we publish the vault operator statements, weekly statements that say how much gold's in the vault. The BDO International, it's a large auditing firm, the third largest auditing firm in the world, multi-billion.
Wow.
So we wanted to choose a company that
has a good reputation,
far too big to want to make a deal with us, risk their reputation, right?
Yes.
So it's also game theory, finding the best people to do this stuff. Of course, there's trust involved, but we try to minimize that with that sort of thing. And then also insurance certificates, so they can check the insurance.
Okay.
And,
so your gold holdings and the Bitcoin holdings are insured, or the gold?
No, just the gold. Just the gold. We ask people not to leave too many Bitcoin on us. They can. We're very secure, but we like people, and we've incorporated some stuff to clever ways to have not sometimes zero confirmation if everything's right, if there's a high enough fee, if enough trusted nodes have propagated the transaction, then we'll have a confidence level that will say, okay, we're confident enough that that's not, and we'll let it through. But we try to make it as fast as possible that people don't need to store the Bitcoin to trade. They can upload it and then trade pretty quickly. And the most you'll wait is 6 confirmations if you've got not a good fee.
Of course, and then you're pretty sure everything is in good order.
Yeah.
Okay, very amazing. One last question. Did you like the beer on Oktoberfest?
I really like that. I'm actually not the biggest drinker. Like I'll have a beer every,
now and then.
Enjoy one, but.
So you wouldn't say it's a good form of money for you?
No, but I often talk to people that are like, I don't trust gold that's in a vault. I want it at home that I can touch and I can use, because if the crap hits the fan,
I want to have it. Yes,
got it. And I've often said to them, look, to be honest, if the whole shit hits the fan, excuse my French there, but if the shit hits the fan, whiskey is a far better form of money at home, because it's divisible, and everyone wants whiskey. If the whole world's
this kind of scenario.
Get drunk. But you can, it's very, very divisible. So you can have different amounts, and you can.
Okay, so when do you open the whiskey Bitcoin exchange?
Yeah. Step 2017. No, but we're focused on precious metals that are there, and people can get it sent out to them. If they want, and all that, but. A lot of people are starting to see why gold's important, because the gold is this historical store of value of 3,000 years. It's been through every war that humanity's thrown at. It's globally recognized. And what's happening now is that there's so many different altcoins and potential, like you've got Ethereum, and nobody knows where to store their entire value. They're like, so a lot of people, if they've got families and kids, they don't want to store their savings.
That's also quite volatile, right?
And so that volatility and what if everyone just drip Bitcoin doesn't scale fast enough, and everyone jumps to Ethereum or Zcash or something else. So what what a lot of people use Vaultoro for is to receive Bitcoin, and especially developing countries. They receive Bitcoin and they instantly hold it in gold.
Okay,
And
interesting.
then instantly spend it as Bitcoin again when they want it. So they scan a QR code and send it off. So they use that. The Bitcoin protocol is the sending protocol, and a lot of miners also mining directly to Bitcoin to gold.
Okay. Yeah, very interesting. Very interesting.
Yeah.
Great. Thank you very much for your time. I think this was very, very interesting for people watching us. Thank you.
Pleasure. Thank you.
And good luck with the whiskey exchange
Yeah.
in the future. Thanks.
Thank you very much.